Tesla does it again! Q3 2025 is in, and the results are remarkable. Record deliveries, growing revenue, and a rapidly expanding energy business highlight the company's ongoing transformation. Today, we'll break down Tesla's performance by segment, analyze what's working, what challenges remain, and what these numbers tell us about the company's trajectory. Starting with the big picture. Tesla reported total revenue of $28.1 billion, up 12% year-over-year. Vehicle deliveries hit 497,099 units, an all-time quarterly record. This shows that demand for electric vehicles remains robust, despite changing government incentives, rising interest rates, and global supply chain pressures. However, Tesla's operating margin declined to 5.8%. reflecting higher costs for raw materials, logistics, labor, and tariffs. On the positive side, the company still generated nearly $4 billion in free cash flow, demonstrating strong cash management and operational resilience despite these pressures. Looking at the segments, the automotive division, Tesla's core business, generated $21.2 billion, up 6% year-over-year. This segment accounts for roughly 79% of total revenue. Models 3 and Y continue to drive volume, while the S and X maintain Tesla's presence in the premium market. Anticipation for the Cybertruck is building, adding potential upside for the coming quarters. While growth is slower than previous years, the automotive business remains the engine of Tesla's revenue. The energy generation and storage segment is a clear growth driver. Revenue reached $3.4 billion, a 44% increase year-over-year. Products like the Powerwall, Megapack, and solar installations are seeing rising adoption among both residential and commercial customers. Although energy still represents only about 10% of total revenue, its rapid growth indicates Tesla is successfully diversifying beyond cars. This could shift the company's revenue mix significantly over the next few years, if growth continues at this pace. Meanwhile, services and software, including full self-driving licenses, supercharger fees, maintenance, and insurance, generated $3.5 billion, up 25% year-over-year. These offerings are high margin and recurring, making them strategically important for long-term profitability. The key will be scaling these services to contribute meaningfully to overall profits, which could help offset margin pressure in the automotive segment. Several trends are clear. Tesla is diversifying its revenue streams. Energy and services are growing faster than the automotive business. The core automotive business, while still dominant, faces slower growth and rising competition, making secondary segments increasingly critical. Margins across the company are under pressure, highlighting that revenue growth alone does not guarantee profitability. From an investor perspective, there are both opportunities and risks. Opportunities include the rapid expansion of energy and services, which could stabilize revenue and improve margins over time. Risks include intensifying competition in the EV market, shifts in government incentives, tariffs, and material cost volatility. Execution risks around new products such as Cybertruck, Optimus, and robotaxis could also influence revenue and cash flow depending on adoption rates and production efficiency. Looking ahead, the key questions are: can the energy segment continue its rapid growth and capture a larger share of total revenue? Will services and software evolve into reliable, high-margin engines? Can Tesla maintain leadership in automotive while navigating economic pressures and rising competition? How effectively will the company launch new products without eroding margins or overextending resources? In summary, Q3 2025 positions Tesla at a pivotal moment. Deliveries and revenue are at record levels. Energy and services are growing rapidly, but margin pressure remains. The company is still heavily reliant on automotive, yet the scaling of energy and services could transform Tesla from a vehicle manufacturer into a diversified mobility, energy, and technology company. For investors and followers, the lesson is to look beyond headline numbers and track the growth of secondary segments. If energy and services continue expanding successfully, Tesla's narrative could shift from EV leader to a fully integrated mobility and energy powerhouse. Q3 2025 is not just about record deliveries. It's about whether Tesla can convert growth into sustainable, profitable expansion across multiple industries. The next quarters will be decisive in defining the company's trajectory.